GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, we saw some dramatic moves at the end of last week, most notably in stock markets, but also in the British pound, which absolutely tanked through that big 130 level, and that's something we'd been indicating for the last couple of weeks. Looked like it was going to be on the horizon. So some big moves up in the dollar, causing these other currencies to roll over, including gold and silver actually, and also other kind of risky assets. So that's where the drop in stocks comes in. Also a bit of a drop back in Bitcoin. So I'm going to talk about all of those asset classes and the big market moves and the opportunities they represent very shortly. If there's anything you would like me to discuss in these videos, please drop a comment. Otherwise, just click that like button if you are getting some benefit from these videos. That really helps us. All right, let's start with the Forex market, start with the euro here, start with the daily chart, and you can see what's going on here. Obviously, we're in a downtrend, that's pretty evident. And then this was the major swing low, which we highlighted through with this green line through here. And obviously what happened is we tried to probe through it, and we attempted a couple of fake outs lower. So most notably at the beginning of last week, we jumped up, we came right back into these series of highs through here, and look at that kind of spike reversal candlestick in a downtrend, and then came right back down to the lows again. And as we start the new week, we are pressing into fresh year-to-date lows, not just year-to-date lows, but you can see obviously looking at this chart, multi-year lows. So this is very bearish for the euro. There's still a chance for a snapback, but it looks like we've already exhausted that opportunity. Here was the chance for a snapback. Here was the chance for a snapback and for the trend to reverse higher. But each time selling came back and forced the price lower. And it looks like this period of consolidation is drawing to a close, and we're about to drop further to the downside. That's how it looks. And so the way I'm viewing this market is to look for opportunities to ride this trend lower rather than looking for market reversals. So dropping down to the 4-hour chart, here you can see things in a bit more granular detail. What was support at 0.760, that is now resistance. And so we've got a little bit off, we've bounced off the lows here. We're not a million miles away. We're 20 pips at the time of recording away from this area. Should we manage to get through this area on an intraday basis, I'd then be looking to this next kind of pivot area where we had a few lows through here, a few highs, a few lows again, another high. So it's a bit of a magnet for the price. That's just right above, or kind of right around and right above the 108 level. So if we do get through 107.60, which is support turned to potential resistance, then look around 108. And I think if we do get through 108 and over the 50-day moving average, well, okay, so then maybe third time lucky is when we get the snapback and the beginnings of a bottom. For now, I'm assuming the trend continues and looking at those areas as potential resistance. So I think that's all quite straightforward. Let's move on to the British pound. And this has been the really interesting one. And so not surprising in many respects that you tend to get periods of low volatility, high volatility, followed by low volatility, followed by high volatility. This is like the cycle that these markets tend to go through. There was a pretty well-defined trend in place for the pound, but it had been hugging on to that 130 level for weeks. And so obviously this is the first time we came down and probed 130, and you can see we rallied all the way up, failed at that kind of spike low, dropped down, came back down to the 130 level again, tried to spike up, failed at these highs through here, which has been resistance for a while at 130, 170, dropped back down again, tried to rally off the lows, but you can see each time comes down to 130, makes a big high up here to 133. Comes down, it doesn't quite make it down to 130, but again, the high that it makes after that kind of challenge of 130 is lower. Comes down to 130, lower high. Comes down to 130, even lower high. And this time crash, it just goes straight through. At this point, no one's buying at 130. All those buyers have been exhausted, and the market has just crashed down 250 pips. So in this instance, probably if we drop down to the 4-hour chart, you'd done pretty well if you just had a stop order under 130, and you'd just be up 250 points in a matter of hours. So that would have worked out neatly. Selling at these moving averages, selling at the 200 period moving average on the 4-hour chart has worked pretty neatly once, then twice again. But this is it. The market has broken down. If you didn't have a buy stop order in and you were waiting for a breakdown and then a retest of the support, well, obviously that's what we're looking for in the euro right now, right? I was looking for this support to break and for us to come back and test it and move lower. In the pound, this move was so dramatic. Because it was breaking through that big 130 level that's held for so long, that the floodgates really gave way, and there's no sign of a bounce back to 130 now, not in the near term. So we're going to have to look for other levels somewhere in this decline. If we actually see evidence of a bottom, which at this point we don't, we're pretty much closed at the low of the last candle, so it's pointless. It's completely pointless drawing Fibonacci's like this, because this is just not any kind of established low. We'd want like one or two up candlesticks to establish some sort of vague chance of a low to get a feeling as to where the market might go. But I would start the Fibonacci when we do see some sign of a bottom at this first dramatic candlestick on the intraday time frame, which comes in right about 130.30. And you can see at the moment, actually, if this did turn out to be a low, the 50% level would be right at the bottom of that initial candlestick. And I would actually say that zone of slight indecision following that initial drop candlestick, this probably would be the area, if we could actually get that high again, that would offer some sort of decent potential resistance. But we don't know if the market will even get that high, given how dramatically this market's moved. It may move sideways for a while, but I don't think there's not going to be too many buyers after such a dramatic drop. So it may be a bit of a meandering move higher. It may not even get to these levels. But of course, we got to keep our risk to reward ratios in mind. Selling too close to the bottom of this leaves us with no obvious place to place our stop loss during this move, so the risk to reward probably just isn't worth it selling down here, even if it does seem quite likely the market will only bounce a bit and then carry on. We do want a bigger bounce to kind of protect ourselves here and make the trade worthwhile. So interesting stuff in the pound. This downtrend very much continuing, uptrend in the dollar continuing. What's somewhat interesting is that we're still consolidating in dollar yen. So this is our big up move in dollar yen. Obviously still going. If we drop down to our 4-hour chart, you can see that we're consolidating here. We talked about last week that 130, we talked about it for a while, is the big level. We actually got to 129.50. So 130 is there. We got to 129.50. We kind of edged our way up towards the top of the range, but not quite touched the top of the range yet. And one thing to note, I didn't point it out on the daily chart, is that we do have this double top potentially in the RSI pattern. So given that this is obviously a big higher high on the price chart, but it's a matching high on the RSI, that is bearish divergence and would indicate that there's a potential top happening. So even if a top doesn't actually happen, maybe we do get some deeper retracement, and a logical spot would be back to, we mentioned it lots of times, this spot on the monthly chart. All right, so moving on, let's go on to the metals markets, and we'll start with the daily chart here. And it had been looking a bit better for gold. We had moved out, first broken out, but then we had that big reversal candlestick, and it started to look like things were not going to be as good. And that's sort of how I was framing things last week, that we basically had this big reversal candlestick. And that followed through the rest of last week. And it looks like we've got a down leg, an A, a more consolidating B, and then a C is happening here. So we had that big move up, near record highs, dropped down dramatically. Market wasn't able to really base out, and it turned out to be more of a kind of consolidating move higher, and we seem to be breaking down from that now. So the way I'm reading this market is that this rising channel has broken, and that we are resuming this down leg, and that could be something as bad as this. I mean, I say bad, but it could be something as bearish as this, which takes us down to about just above 1750 somewhere, and back down towards this, which proved to be support for ages. I think that was actually 1780 that was support for a long time before we had that big breakout move. So we actually could erase this entire last leg up, potentially, or if you want to be more conservative, you just start with the top, and that would be this range top, which we had like we had a series of resistance. We had a fake out, a second fake out, and then we got the big move up. So it could be down to there, which is about 1830. But to me, it looks like we're getting a continuation move. 1830 would also be, roughly speaking, the 200-day moving average as well, which would be a logical downside target. After getting that much above the 200-day moving average, we're now coming back to test it again. So a reversion to the mean trade, basically. So if I get rid of this line, we can drop down to the 4-hour chart. Oh dear, let's go. So now that this trend line has broken, I would be looking for the trend line itself. If we do get a bit of some kind of dip bias coming in here, because this is support. So if the market can rally up to the trend line, that would be a potential area of resistance, which could see some follow through to the downside. Or if we were able to get a little bit further up, these 2 prior lows through here, somewhere in between those, offer a slightly better, a bit higher price for any kind of sell opportunities. But the way I'm thinking about this is that this we want to be in line with this downtrend, and we want to be in line with the kind of breakdown from this rising channel. I think if we do close for a day or two back inside the channel, then maybe this would be a false breakdown of the channel. And the best confirmation would be if we actually got a close back above these highs here, this resistance, then okay, false breakdown, move back through resistance. It's not necessarily bullish, but it sort of undoes the bearishness, and you don't want to necessarily go and do those kind of bearish trades anymore. Naturally, silver looks similar. This is the daily chart, and you can see we had the false breakout, and 1, 2, 3, 4, 5 days last week. Last week and the start of this week of just real bearishness, and have actually taken out this major support level at 2380 up through 2390, really that kind of 10-point support range. And yes, we're down through it. So there's a chance that we actually close today higher, and that would be interesting. We might get a bit of a bounce, but the market looks very bearish. You could argue that we're in a sort of a downsloping trading range, and if that's the case, we're actually roughly around support at the moment. So that if this is a parallel channel, then actually we're roughly kind of just testing the bottom of the channel now. So if we close the day at the start of the week back above this support level, so it's like a spike down and up again, then maybe we're actually getting some support from this channel. So it's a big rally up, consolidating in the channel before some eventual bullish move. So there's still some hope for silver, but you've got to say this is looking pretty bearish. And if we drop through this channel line, then okay, this channel's not really valid, and it does seem like we're coming back down to test the major support areas on the daily chart, which if I just add myself a little shape down here, then it's down through here, which is about 22. So might be that same with gold, where I had that kind of projection scenario from the top, and it would, one scenario is that it just erases this entire rally. Equally, if we drop through this channel, it does seem like there's not too much in the way of support or potential support for silver, just taking us straight back from 23.60 odd from where we are now down to about 22. Moving on to the oil market, unfortunately that breakout didn't materialize again, and interestingly another head and shoulders top. This oil market keeps head and shoulders topping all the time, so here was one over here, and I believe the big top was also a head and shoulders, so left shoulder, head, right shoulder, and then again here left shoulder, head, right shoulder, broken down from this neckline and come right back down to this previous support, and we may hold this level. This is a potential support level, but it looks like we're coming down to probe this more significant level down here, which is the initial low that we made after crashing back down from those big highs. And same thing as before, was what market was it? The pound, where 130 was the base. Here we have basically 92, is it, as the base? Yep, 92 is the base. So rallied up right back to 92, rallied up lower high, rallied up from 92 as a base, lower high. And it looks like if we do come back down to 92, okay, I'm saying 92, no, 92, yeah, no, okay, all right, fine, 92 to 93, let's call it a zone. If we come back down to there again, it does seem like a good chance that we'll snap lower and actually test the 200-day moving average for the first time in a while in WTI crude. So with that bearing in mind, if we did get a rally back up to the neckline, that'd be nice, but it seems unlikely. But naturally, you would want to be paying attention to the price action around the 100 level. So we had these two little spike attempts through 100. It's not a very flat line. Let me redraw that. But you get the point. Basically, there's the 100 level through there, which I've left on the chart deliberately. And that's, part of the momentum here is we've gapped and we've gone through the 100 level. If we can just tip back towards 100, even 99, that might offer the bounce for this continuation move down to the support at 92 to 93. But the assumption for the time being here is that we're in overall a sideways market, but given the lower highs and the consistent lows, the support, it basically is a sort of triangle pattern, right? Where this is kind of roughly speaking the triangle, and the logic there would be that we break down from it. So bearish bias for the moment in oil. Just this pullback seems like it's got a little bit further to go. Just weren't able to build any momentum and actually take out this high, and actually have some chance of testing the multi-year highs up there. And so last but not, it's not last, penultimate, we're looking at the stock market here. And you can see, this is our daily chart. We had this rally off the lows that we've been talking about for the last few weeks. We failed to break through that resistance there. We started coming down. This is when I got pretty cautious. You saw we kind of bounced off that interim support, retested that, broke, so fake out, dropped, come back. Yep, confirmed, couldn't get through it, dropped down again to this resistance. So there was a chance of a rebound from there. We came right back up to this, initial resistance, support, resistance, and then resistance again. Big bearish day into the support again, and then from after that, big bearish engulfing candlestick. Yeah, it looked pretty bad, and the following day was a big sell-off, and we're getting a pretty rough start to the new week. And it may not happen in the space of one day. It may happen in a couple of hours, but it does look like we're heading back towards testing these lows of the year here and continuing this move lower. This is basically a bit of a choppy sideways market. So for those brave enough, there will be some opportunities to buy near these lows, I think. Since that was a false breakout to the highs, I wouldn't be surprised to see a false breakout to new lows and then a rally back up into this just sideways range again. But at the moment, this looks pretty bearish, and it looks like probably on the short-term basis, we want to just be following this momentum lower. So I don't think we'll get back to where we broke down from, which is these highs up here. So there's a bit of a similar theme, right? We've had some big down moves. And to immediately not immediately, but to participate in this down move in the short term, you're probably not going to get a 50% retracement right off the lows. If you did, I would think that's an opportunity to take advantage of. But otherwise, it's probably not that we're going to get this high. It's going to see smaller bounces before this move continues. And it's not necessarily obvious where those levels come in. More picking out the round numbers in the middle of here. In the stock market, especially, people like the round numbers. So 4,300 is where that move stopped almost dead. Only got a small bounce. So if we can recover somewhat from here, look towards 4,300, might not even get towards 4,300, a few points lower of 4,300, and maybe the market, the downtrend continues. So this is last but not least, this is the last market we're covering for today, is Bitcoin. And as has been the case recently, when the sentiment in broader markets has turned bearish, Bitcoin's turned pretty bearish too. And same deal with the stock market when we were talking about this fake out. We talked about the fake out in Bitcoin. So we were already bearish once we'd entered back into the range again. We dropped back through that former resistance, came down, tested that resistance again mid last week, and we're rolling over through it. And then if I drop down to the 4-hour chart, you can see that we're basically taking out the lows at the moment. So even if this was a kind of big ranging kind of support zone, we do seem to have dropped through it, and so that would suggest that we come back down to test these major lows, which on the daily chart you can see starts here, and then the big one, which is the January low, comes down here at basically 33,000. So having taken out these most recent lows, there is definitely some other support levels in this range that have been kind of working throughout this whole range that Bitcoin's been in. But it does look like, the bias is to the downside for the time being. We failed to break out, failed to hold the next level of support to bounce from, to resume the breakout. We made some interim support, broke down from that. So just all the price action, and then failed to on the test of the old resistance, failed again. So all the price action, the resistance levels getting rejected or seeing fake outs, and the support levels giving way. That's bearish. And so my assumption here is that we come towards the test of the bottom of the range, but there are some support and resistances in the meantime. So if you're trading short term, that does offer you some kind of targets on your trades as we potentially work our way down to that 33,000 level. All right, there we have it. I'm going to call it a day there. Good luck trading this week, everyone, and see you at the same time next week.